Good turnaround Tuesday, Warriors. How's everyone doing today? We have Ryan Littlestone with us at the top of the hour. I see you in here, Ryan. So I know sometimes the tweet is confusing. We do an hour of analysis and then the interviews at the top of the hour. Okay, so looking forward to speaking with you. Never met you before and went to your site. Looks outstanding. So looking forward to our conversation in about an hour. Getting back to the markets, the euro's a very slow, grinding decline. Difficult to be patient with it. You know, sometimes it's not always right to sell a sleeping market. That's an old Wall Street expression. Most of my expressions are old. So perhaps we get some type of pop here. Dollar index yesterday, I talked about the 96 level. So far, it hasn't penetrated it. So if we're going to get a pullback, maybe back towards 75 or so, to me, that would be a buying opportunity. I believe that once we get over 96, the dollar could really begin to accelerate. Could happen today, but hoping for one more dip in the dollar for shorting opportunities. Of course, right now the pound is weaker than euro, so that gives me some belief that that could happen if the euro was weaker than the pound. I wouldn't be counting on any kind of pop, and you know I never count on anything, but would love to see one more bout of strength in the euro. Aussie, after the RBA had a very nice candle here. This is still possibly a failing rally in Aussie. Kiwi 2, I think it's getting close, maybe back around 69.10 or so. I would attempt it, and even though longer term the yen might be okay, and this is a confirmed high, so I don't think it's the end of it. You know, 110 was supposed to be and is a pretty significant area. Steve showed 110.80 having some confluence, so we'll see if that happens. Here's a moving average right around 1070 on the daily. And something that's just hanging on by a thread that goes along with the theme for corrections during the month of February is the oil. And the oil yesterday held an important level right here. Okay, I saw a tweet by Greg Horvat, said that if we take out this would be a breakdown of an uptrend. We had a nice bounce from there, and also a few other things happening there. You actually have a 2-week off number that it held yesterday. Simple technique, you just count back a couple weeks, and the number was 53.68, which it did hold. We'll see if they could generate one more rally, but it's looking pretty vulnerable. Like this could be a failing rally. Any rallies back towards these highs should be sold, and I do believe under this low, to put a horizontal here, crude is basically on its way back to 51 minimum. That's what this would measure, back down towards these lows. So also taking a look at the gold and silver market. So far, their bounces, especially in the silver, it looks like it could be rolling over. We could get maybe one more pop up here towards 16. Gold acting better. Something else, talked about the gold-silver ratio, that it looked like the gold-silver ratio could pop from here, and that made silver the preferred short while we're rallying and in a counter trend fashion, in my view. So gold also being contained by this moving average here on the 1 hour. And we, again, it's like the euro slow grinding break. Maybe we get a little bit more strength for a failing rally here, but a lot of these markets are pretty comatose. Yesterday, we made new highs in S&Ps. I think I talked about it with Blake. I thought we could trade 25, and we're trading above it now. So we went to 25 yesterday, pulling back. a little divergence on the 1 and the 4. I don't know. Feels so close. I could taste it. So we also have some important resistance at 2740, including this what is it? It's the 200-day is up here, 2744. So we'll see if we're getting last gasp rally. I don't know why we can't pull back. 38% would take it near 2600. And why not a deeper correction before it makes another rally attempt? So we'll see. State of the Union address today. I haven't heard anything on China trade in the last 24 hours. I know they had a delegation here in Washington. So that's it. Turnaround Tuesday. My preference, since I liquidated a lot of my dollar longs yesterday, would be a pullback in the dollar, perhaps one more rally in the euro, and looking at commodity currencies to be shorts, but not from here. Something that might be interesting, because the yen, like I said earlier, looks like it's starting to get a little tired, would be something like Kiwi yen at new highs up here. We will not be confirming. As you can see, we're there now. I think this high is 88. It is 88. We're 86. See, the RSI is well under 70 on the 1 hour time frame. It's right there on the 4 hour time frame. And, you know, even if it's still good in much higher levels, a pullback after this kind of run to 75, 74 and a half, you know, would not change the picture that much. And if we're going to have some kind of risk off, a lot of people have been trying to short Aussie yen and Kiwi yen with no success, because I think to a lot of people, this equity rally has stretched further than most thought, that we're starting to short it at 2600. But I'm stalking this Kiwi yen for a possible scalp. So looking forward to talking to Ryan at the top of the hour, and I'm going to bring in the rest of the team to share their views and what their thoughts are coming into Turnaround Tuesday. And as usual, we start off with Blake. How are you this morning, Blake?
Hey, good morning, Coach. How you doing?
Good, buddy. So what's new? What's on your radar?
Well, there's a couple things on my radar. You know, as far as what's new, it's quiet out there. I mean, this is a very, very quiet market. The volatility is extremely low, as anybody who's trading the FX market knows. You know, I'm sitting here looking at the Aussie. I really like to sell the Aussie on rallies. Now, there was a really good article in Bloomberg, which I won't share here. You guys can find it on China Trade. You know, I'll just cut to the chase here as far as that goes.
Cliff notes.
Yeah.
That's how I got through high school.
Basically, that's funny. When you're dealing with, you know, China-U.S. trade negotiations, and this has been something that we've talked about over the last few weeks. And I'm going to ask you, Dale, who's the beneficiary of the China-U.S. trade deal? Any China-U.S. trade deal? Who's going to be the beneficiary there?
It's probably China, because they're being hurt more by this than we are.
Well, I think. Well, yeah. Okay. Well, who's the beneficiary?
I think it'll be Greece.
Greece. Okay, the Greeks are. The beneficiary is going to be the United States. I mean, the U.S. is going to, you know, we're negotiating to get a better deal.
Oh, okay.
Period. End of story. Right. Who's it going to hurt? I mean, China, yes, they're getting hit with tariffs right now, already slowing economy. But overall, I mean, when you go back 12 months ago or 18 months ago, you know, who's getting hurt is going to be China. Because the U.S. is renegotiating a better deal. You know, we got the upper hand. We've got the consumers. We are, you know, getting a better deal ultimately. All right, we should anyway. So who else is getting hurt? Australia. Australia
yeah.
is
Okay.
going to, and same with New Zealand too. You know, China is going to agree to buy more goods from the U.S. and less, and it's going to end up being less from Australia and New Zealand. It's a net sum game, right? I mean, there's only so much money being bought and sold, and when you take it out of one pocket, it's going into another, and if it's going into the US's pocket, it's coming out of Australia or New Zealand. And the reason why I point this out is because ultimately I think any type of trade deal is going to be bearish for the Australian economy, New Zealand economy as well, considering New Zealand's biggest purchaser of goods is China. So these currencies are going to be a sell rally type of event, and that's why I know we're all sitting here waiting for some sort of deal to get done, and I'm hoping it's going to be before the end of March, which is when the tariffs go back into effect. I hope, but that doesn't mean it's going to happen, but it should
Blake,
happen. Yeah.
Theoretically, I agree with you, but theoretically speaking, since Australia is mostly focused in exporting raw materials, theoretically speaking, the deal should hurt Australia a lot more than New Zealand, because New Zealand, for example, main exporting market is dairy. So, that should not be affected that much. So theoretically speaking, if we want to extend that, that should be negative Aussie Kiwi. I mean, a possible deal.
Yeah, that's true as well. I'm more concerned about the Aussie at this very second in time. So what I'm looking for is I'm looking to sell rallies in the Aussie dollar. Now, that doesn't mean that it's going to be today either. We're coming off the RBA. The little bit more hawkish comments actually, put a bid in the Aussie, and here we are, trading above, 72. We're trading around 72.50. Frankly, I'd love to sell the Aussie on an approach to 73 cents, which is the 200-day moving average. I think the 200-day moving average is going to cap the Aussie. Ultimately, I think that if we can get a rally back up towards new highs, I would be a seller there. And it might not be the right spot either. Like I said, these negotiations could go on for another 6 weeks. So we could be, who knows where in the next 6 weeks. I'm just talking more today, but ultimately more for a macro picture, a longer term macro picture, because the conventional wisdom is going to be, U.S.-China trade deal is done. What happens? Risk spikes up, Aussie yen spikes up, Aussie dollar may spike up, and then I'm going to use I'll tell you this, 2 weeks from now, a month from now, whenever a trade deal gets done, I'm selling Aussies as a result. Soon as that announcement comes out. That doesn't mean that I'm going to short the Aussie right now. I mean, we could like, let's say we're sitting here looking at the Aussie dollar right at this moment in time, and an announcement comes out, the Aussie may spike up to 74 cents immediately. And if I'm short, I'm going to be a little irritated that I got caught short, but I'm ultimately going to sell any rally. So as soon as that,
great idea, Blake. So you're looking to sell good news.
Oh, yeah.
Everyone will think everything's okay again, and you're saying it really isn't going to change the long-term picture in Aussie.
No, it's going to actually worsen it. So I'm going to sell a rally if I can get it. If I'm not already short, if I'm already short, like I said, I'll probably end up being a little irritated because I'm going to get caught being short. I'm just going to have to, figure it out as it comes, because it doesn't. I could get short right now, and a week goes by and I'm in the money, and it drifts lower, and then all of a sudden the announcement comes out, I find myself upside down, and then I have to trade out of it. But I'm just saying that if there was an announcement right now, this very second, we would probably see the Aussie dollar spike up, like I said, to 74 cents. Who knows, 75 cents. I would sell it on a rally. I'm just kind of, that you asked me what was on my radar. I'm just kind of giving you a heads up of what's on my radar right now.
Like it.
But that doesn't necessarily mean it's going to happen within the next 20 minutes either. So, for me, like intraday, if I can find a rally in the Aussie up towards the 200-day moving average, I am a seller. I think that's going to cap it, at least for today, minus any news coming out. Now, I also want to talk about a little bit about the euro. The euro we're range bound. We're stuck in this range. We're in the middle of the range. This is a slightly upward channel. Really key trend line comes in as support, around 113. I'd rather be a seller at 115.50 and a buyer down at 113. There's nothing, absolutely zero to do with the euro right now. I mean, I'm not saying you can't make money. I'm not saying you can't short the euro and make 40 pips or buy the euro and make 40 pips. I'm not saying that at all. I'm just saying right now, there's nothing to do. Like I look at the euro and, it's nothing. Now the cable, I've been looking for, the break below the 200-day moving average. If we get down towards 129.50, I'm going to think about buying it. I know there's a lot of mixed feelings about the pound. I'm looking more of tactical areas to be long and short. I don't want to be short right now below. I mean, I think it can drift lower here. I actually think the better trade in the cable right now is to actually be short intraday. But if we get down to 129.50, I'm a buyer. 29.50, 129.40, somewhere down that neighborhood. I'd tactfully like to be long the cable on a retest of this channel. I'm just talking more technicals than anything. I talked a little bit about the Aussie, the Kiwi. You look at it. This is an 88% retracement failure. So it's it was a better short going into Friday. I didn't trade it, so now I don't really know what to do with it as far as the Kiwi goes. Let's talk a little bit about the Swissy. The Swissy is above parity. We rejected it the last couple of days, and going into yesterday, we had another rejection up at parity. Today we're above it, and we're squeezing. And I think the better trade out there right now is long Euro Swiss. Even though I'm not long the Euro Swiss, I think that's the better trade to be in currently. But the dollar Swiss still looks constructive. It looks, as long as risk appetite stays strong, I think the Swiss is going to continue to underperform. Now, speaking of which, the S&P, let's talk a little bit about the S&P. Here we are continuing to grind higher, rallying in the face of all of these worries. So it's just climbing the wall of worry. We are closing in on the 200-day moving average in the S&P, which is coming up at 2740, about another 10 points. Now, it is Tuesday, and as Dale likes to put it, it is turnaround Tuesday. I don't know if we're going to get a turnaround in equities today. I'm kind of hoping so, because it would help some of my other positions that I have going on at the moment. But the S&P is continuing to grind up towards the 200-day moving average. It was one of the guys in my office. He's the biggest trader in the office. He's when I say biggest, size wise. He's like, I was out with a lot of my friends for Super Bowl Sunday, and he goes, even people that don't trade the markets, friends of mine that don't even trade the markets, were shorting the S&P last week. They're like, oh, it's bounced too much, they want to sell. And he's like, man, that made me really nervous about being on the short side of the S&P. And I'm like, it makes a lot of sense. A lot of people have seen this V-shaped recovery, and they're like, oh, I'm going to, I think if you shorted the S&P right now and you close your eyes for a couple of months, you're going to make money. I believe that. That doesn't mean it's strategically the best place to be short at the moment. We could have another few days of a rally, maybe even up towards 2,800 before we ultimately turn around. I do think that somewhere up here is where I think risk is going to turn, somewhere between where we're at right now and up towards the 2,800 level. I think if I had to guess, we're going to be topping somewhere around here, but that could be today, tomorrow, 2 weeks from now. I don't know, but as far as the S&P goes, we continue to grind higher. Now, I hope we turn. Like I said, I hope we turn, because one of the positions that I'm in is I'm in the U.S. dollar Mexican peso, trading it in this triangle, looking for an upside break. Banxico meets on Thursday. We got a couple new committee members, and so I think the Bank of Mexico decision might be a more interesting one. Plus, you know, Mexico's in a little bit of trouble, even though they're expected to keep rates unchanged. If they continue on the path of, or they start on the path of easing, that'll be really interesting. And it obviously will fuel a rally here. I'm still keeping a really close eye on it. Dollar Canadian. The dollar Canadian is, you know, we're at an interesting level in the dollar Canadian. I look at this currency pair as, you know, really strong support down here at this trend line support. You can see it right through here. That also coincides with the 161% extension of this, the flag pattern of the bear flag. Okay, so you've got low, high, all right, there. And you can see that's 161% extension right there. So I guess what I'm trying to say is I think it's well supported at 131.50 for now, but that doesn't mean I want to be a buyer. I think the better trade right now, if I had to, you know, consider taking a position, would be shorting it at the breakdown point at 131.80, but that's 40-50 pips away from where we currently trade. So again, I look at the dollar Canadian. I don't necessarily want to be a buyer right now, but I don't want to be a seller either at this very second. I'd rather short it, but I'd like to see it 50 pips higher to sell it. So for me, there's nothing to do here. Now, two last things I'm going to leave you with before I turn it over to Steve and Stelios is the US dollar Swedish krona. This was the chart of the day yesterday. If you guys don't go to the chart of the day, our blog, it's free. You can see the chart of the day. Yesterday was the US dollar Swedish krona. Obviously, I'm paying pretty close attention to the US dollar Swedish krona right now because we're up against the flag top. Now, you see that we're up against the flag top. We're also struggling with that flag top. But I think if the US dollar Swedish krona actually breaks higher, that's going to be pretty bullish for the dollar. Ultimately, now I'm not long. I think from a risk reward perspective, right now is the time you want to be short, not long. But that doesn't necessarily mean that I'm really too excited about shorting the US dollar Swedish krona. I think, like I said, from a risk reward perspective, if you don't believe the dollar is going higher, if you're sitting here going, yeah, that, you know, dollar is just not gonna, you know, dollar ain't gonna go anywhere, then you know, be on the short side of the US dollar Swedish krona. Your risk is very manageable, you know, if that's your point of view. And I would think that there was probably some data that came out of Switzerland or out of Sweden last night. I haven't looked yet. I have to go back and do a little bit of reading, but you can see this. Yeah, this might have been data released reason that we saw a reversal. I'm not sure. Last but not least is the US dollar Japanese yen that I'm going to cover today. And the US dollar Japanese yen, I do have a short in the dollar yen. My short is like 109.90, like basically right here. We failed above the 110 level yesterday. And one of the things I like about the dollar yen, or being on the short side of the dollar yen right at this moment, is that we do not have, or we did not, we're not rallying with equities. So as equities continue to plow higher, you're not seeing the dollar yen participate. We also, just so you know, notice, and if you are a ForexAnalytix subscriber, you got this analysis yesterday. You can go to the US dollar Japanese yen basic technical analysis. Yesterday, the dollar yen right here said dollar yen is approaching the 110 level. Once again, the hourly RSI is very overbought, but in the event we get above 110 level, the 127% extension is at 110.09, which may offer very good resistance as well. We rallied to that happened when we were right here. We rallied to 110.15 and then rolled over. And so I like the fact that we had this false breakout above 110. we hit the 127% extension of this last move lower, okay, and that rejected price. So like I said, as long as we stay below the 110.10 level, I don't mind having a short in the dollar yen. I'm not in any particular hurry to cover my shorts right now because it's not rallying with equities. Risk appetite continues to improve, and the dollar yen's not going anywhere. So I like that. That for me, you know, continues to keep me in my position. Now, one last thing, Dale, are you here before I turn it over?
Sir.
Okay, so you did interview Ryan in the past. You have. You may not remember.
Oh gosh,
yeah, but you remember you've interviewed thousands of market experts over the years, and back, you know, the last, I don't know, it was with us. I don't think it was our face webinar. I think it was back when you did your other webinar.
Oh, on FX Street.
Yeah, when Ryan was with Forex Live, I think you interviewed him because I chatted with him on the side. Not today. I talked to him like a month ago when I reached out to see if he wanted to be on.
I hope it doesn't, you know, doesn't hurt his feelings. I will confess that I didn't remember interviewing Steve Bolke.
He's gonna be butthurt, and just so you know, Steve has been butthurt for the last 2 years. Because you didn't remember that. So, so anyway,
I'm gonna have to interview Steve again. So you know,
you might have to.
Haven't slept in 2 years. Haven't slept in so many years.
Oh my gosh! Everyone's had to get therapy because of that. Okay.
Yeah.
I feel. You know, I'm very good at guilt. So thank you.
All right. Well, but you know, Ryan, I know is really excited to be on here. And for those of you guys that have never heard Ryan and his analysis, he's very, very talented. I have a lot of respect for what he's doing over at Forex Flow. So make sure you guys stick around 30 minutes from now to listen to Ryan.
Even Amanda's excited, and she rarely, you know, says, "Oh, you know, I can't wait to hear somebody that I'm interviewing." And you know, Amanda's a great trader in her own right, and she's excited to hear Ryan. So I hope that makes up for my lack of memory. I have what they call old timers disease.
Yes, you should.
Not Alzheimer's, just old timers.
All right. Well, hey, I hear Stelios's voice. You guys have a great second half of this the face webinar, and I'll catch you guys on the flip side tomorrow morning. And have a great interview with Ryan.
Thank you, Blake. Good hunting.
Thanks, guys. Bye-bye.
Right.
Steve, we'll have to set up a day for me to interview you, or we could interview each other.
Sure, absolutely.
Right. Steve, before you start, just a couple of things.
We had services PMIs, eh?
Yes, actually, I was going to say, Blake was talking about the Swedish data. They had services PMI as well, which missed, might have been the reason for that little spike. So first of all, we had the RBA. Blake mentioned it. The RBA was actually a little bit on the dovish side in terms of the forecast. They downgraded the GDP forecast slightly, and they did acknowledge that there are some risks, you know, globally, domestic and abroad, which kind of makes sense. And but the interesting thing is that they stuck with their forecast of inflation, eventually reaching around 2.5%. Which is higher.
The market was obviously expecting, you know, a more dovish approach from what we've seen in the transaction as well.
And actually, I actually don't have access to the OIS swaps for the Aussie, but from what I understand, there's the market's actually pricing a slight chance of a cut this year, which, you know,
which is going to increase. Don't worry about it.
Yeah. But for where we are right now and what the RBA said, it's kind of not in line with what the RBA said. So I think that's probably the reason why we had a little spike. And well, Aussie is still a little bit higher on the day. The other thing we have today, later today, is the State of the Union address, where we don't know what Donald Trump's going to say, but there's a lot of rumors that he might declare a state of national emergency for funding the wall and all that. So, you know, another interesting thing to see. This is later today, and we did have, like you correctly said, some more PMIs. UK services PMI came in at 50.
Italy, one more index for Italy that's now in contraction, right?
Contraction, correct. Yes.
Yeah.
French services PMI came in slightly better than expected, but they're still well below 50. And German services PMI a little bit worse than expected. So, overall, these PMIs, which are leading indicators, they're starting to roll over.
Yeah.
Yes, and UK services PMI came in lower than expected at 50.1 versus 51.1 expected. I did write in the chat room, I am actually very surprised. These are still not. These are still in expansionary levels. I thought with this whole uncertainty and everything, when you're a corporation, you're looking at the projects and the investments you want to make. When you have this big binary event hanging on, above your head, you're not going to invest. You're not going to take risks, right? So I was expecting these PMIs to be already below 50. They're not, but they seem to be heading this way. And data-wise, we have ISM non-manufacturing PMI out of the US. This is in about an hour and a half from now, and services PMI. So really nothing major. No, for the rest of the day, it's just the State of the Union address, which I think.
What time is the State of the Union, Celio?
Good question. I need to check that. Sorry, I don't remember offhand.
There might be some fireworks there. We'll see.
When Trump speaks, there is always fireworks.
It's in the evening here in the States. My best guess would be 9 p.m. Eastern time.
9 p.m. Eastern. Yeah, Ziggy says 9 p.m. Yeah, and the other friends are confirming. We also, since we're talking about times of the day, there's a question about when do we usually post the chart of the day. Usually it's around 5 p.m. Eastern time. So, plus or minus 1 hour. It's at 5 p.m. Eastern time, the chart of the day on the blog. And by the way, you can also subscribe to the blog post. This way, you get notified for whatever post comes out. So it's completely free. Okay. And speaking of this, of all that, to take it out of the way, and so we can go to the charts. Let me remember that this show is sponsored by Forest Park FX, and if one way for you to get access to our services at a discount is to apply to our reimbursement program. Regardless, you can use the Skype contact here or the email to speak with Trent or Justin. They're excellent in guiding you to finding the best broker for your needs, for your trading style, for your account size, etc. I'm a client of theirs, and I'm really happy. They're amazing, in what they do. They're great professionals. So, Coach, any comments before we start on the charts? Anything you want to discuss?
I think I covered it at the beginning, Steve. I don't know how you feel, but the S&P termination of this rally to me feels so close I could taste it. And I think between here and 2740 should be it for some type of correction. Fib retrace 38%, halfway back, something. Where's your head at on this?
I agree. Actually, I'm exactly in agreement with Blake, meaning I think that anywhere between the 200 daily moving average and maximum this previous high there, we should see some retracement lower, which should be decent enough. I mean, I would expect, it depends on how high we go. If we go all the way up there, I would expect a retracement towards 2690 at the very least. If we fail close to the 200 daily moving average, I would expect a retracement towards 2600. So, for me to tell you what kind of a retracement I would expect, I want to see where we're going to fail. But definitely buying up here, there is a clear 5-wave move. 1, 2, 3, 4, 5. You don't really need to be an Elliott wave expert to see it, with a naked eye without even going to a lower time frame.
Also, we got Fang's last soldier earnings out of the way yesterday, Google, and the reaction wasn't so great.
Yeah, it's Google.
It
I was
wasn't a
monitoring.
disaster like Facebook was.
No.
Last time.
Google. I was monitoring this, descending trend line as a potential resistance some time ago. We broke above it. We came down. We retested it, and yesterday, actually, we moved above this 50% fib, also the 200 daily moving average. So I think that opens the door for some more upside. We have this confluence of these lows here with a 61.8 for Google at 111.57, and a little bit higher. We have a resistance area at 111.80. So those are possible levels of resistance for Google. But as you said, FANG stocks, definitely some of them less, some of them more. They don't seem very likely to reclaim the highs. Personally, I believe that some of them are, have like zero chance of reclaiming the highs. You mentioned Facebook. Facebook had still some nice gap higher and some nice price action here. We're hitting overbought levels once again.
We're halfway back already. Huh.
The daily RSI. Yeah, actually we're halfway back. And momentum so far doesn't look that bad.
No.
But I would definitely not count on Facebook pushing to new highs like in a V-shaped recovery. I would be a little bit careful because, as we said early on, Facebook has definitely had a big problem with its business model once the rules of private data became a lot stricter. So I do think that this eventually is going to hurt the business. And the market was pricing in a different performance up until that point, and that's going to be the case. Also, as you see, Nasdaq.
Okay, yeah, and I still like the dollar, and crude is hanging on by a thread. Under yesterday's lows, I think crude, believe crude is really vulnerable. So
Okay,
let's
have a look at it. Definitely, crude can retrace somewhat from there. Oops, sorry, I forgot that it changed.
It held right where it had to yesterday, and we'll see if it can hold again today. But
there it is. As you
really
see,
looks vulnerable.
Got rejected from 38.2, but yes, yeah. we are seeing some weakness during those 2 days, and that can open up the door for a bigger retracement, perhaps towards 50 and a half, 49 and a half. But I do think that there is a very good chance that crude is not done. I mean that probably this pullback that might be coming now. Let's also have a look at it at shorter term time frame. This is the 4-hour chart. So I do believe that crude has a decent chance of producing more upside after a decent pullback. So I wouldn't be turning bearish, outright bearish from here. In the short term, yeah, it makes sense, but in the medium term, I think that there might be more upside, as I said, and I would probably, if the price action is right, I mean, if the price action does look corrective to the downside, I'm probably going to get involved with crude once again. Now, why I also care about crude, besides the fact that lately I've been doing very good with crude since last year, is the fact that I have this position in the rest of my position USD CAD. So I want to know what's happening here because I just want to make the best out of it.
Great trade. That was a great trade, Steve, and you did it from the top of the flag up there, and really nice trading.
So I want to see if we see crude moving to the downside, perhaps we're going to see USD CAD trying to bottom in a little inverted head and shoulders formation here. You can see it, right? I drew only the neckline for now. So that's why I'm monitoring this, because on the other hand, don't forget that there is always a bearish scenario. The bearish scenario is that this can end up being just another short-term consolidation, bottom line, a triangle, right? So that's why I'm not, abandoning my position, simply because this can just be some correction in time, and we can still see one more push lower towards 130, which is my ultimate target. And that's why I'm closely monitoring what's going to happen from here. Perhaps depends on what Trump says today. Even Trump on his own might move the dollar enough today to to produce something. not only for the USD CAD, but across the pairs. Stelio, by the way, didn't we have trade balance for CAD today at some point? I just remembered it.
Yes, you're right. Actually, hold on, let me check.
Is it out already? Because I forgot to check it.
Actually, it was supposed to be out today, but now I don't see it in the list of items. Weird. I'm looking at
I thought we had trade balance, Canadian trade balance.
Yeah, it was supposed to be released, but on this calendar, one calendar I'm looking at, it's not there. I'm going to check another one. Just give me.
I think we had some expectations about like a 2 billion negative trade balance or something like that, if I remember right. Okay, anyhow, so that's why I'm also monitoring crude, because I want to know what's going to happen here in CAD. Are we going to have a little rebound, or as I would prefer, one more push to the downside towards 130? I think that 130 is a great target to be looking at, especially if you consider the bigger picture, because if we go to the daily chart and we open the USD CAD, you're going to see that 130 is going to take us in this horizontal support zone, 78.6, more or less, roughly there as well. And as you see, this ascending trend line support from this channel is also approaching that level. So I would be quite careful in this case. Keep also in mind the following. This is a very usual short-term trading technique. As you see, coach, we had an inside daily candle yesterday, and so far today we have another inside daily candle. So there is a very well-known short-term trading technique that when you have two inside days, an inside day of an inside day, what you do is in essence you buy the breakout from the range of the first day, or you sell the breakout from the range, and expect at least an extension as large as the range of the first candle. So, usually that means that when a market is coiling for at least 2 days, and you have volatility contracting, the ADR contracting, you expect that once you get a breakout from that zone, there should be at least some short-term expansion, and that's the
trading lesson, Steve, on inside days. Nice.
Steve, by the way, I want to thank Ryan and Carl. They both pointed out that the trade data was delayed because of the US shutdown, so there was no Canadian trade data. Thank you, guys.
Okay. On the WTI crude, is there a reason you don't use the front month? Yeah, I usually try to use CFDs, etc., because they depict very nicely, they have no gaps, etc. They depict very nicely the price action. So, when I'm charting, I prefer to use those, some kind of a liquid CFD, usually, anyhow, they monitor price action very closely. So, it's out of habit. So it doesn't really make much difference. I mean, the outlook remains roughly the same. Now, let's have a look at the metals, because I was reading some titles. I don't remember which bank. Citi, I think, expects like a 10% appreciation in copper. I'm on board with them as long as we see. I need to remind this. This is going to look like a nice trade, because now this is clearly a rectangle in copper that we have here, that has a range between 250 something and 280 something, so a 30 cents range bottom line. So I would expect 30 cents to the upside if we do break this high. So I would agree with them, assuming that we break this resistance. Okay, until we do that, I think there is not much to do here, because clearly, as I said, we are in a rectangle, and that's clearly a range trading environment. Now, having to do with palladium, as I warned, the move lower in palladium didn't look impulsive. So, you have to respect the potential for more upside as long as we're holding this ascending channel. As it seems, we're going to have to be a little bit more patient if we're expecting some type of weakness. And having to do with silver, nice rebound yesterday from 1570. I said yesterday that, listen, we're currently testing support, and we did pare back the vast majority of the losses we had by the end of the day. So far today, hasn't been doing much. Same deal here with gold. Gold actually definitely sold off a lot less than silver did. We still have this short-term rejection from the 78.6, but I want to see a lot more to trust these reversals, okay? Because yeah, we did react from levels that are worth monitoring, but that on its own is not enough to turn me bearish. I want to see some momentum, some continuation, some kind of a move that will show that the rebound higher is over. Now, a pair I wanted to show a few days ago, but I completely forgot, is USD Yuan, because we had this nice confluence of supports playing out here. We got a nice rebound. So I want to see what's going to happen with this rebound, because so far, it's not enough. We did have a morning star formation, and I do monitor closely reversal days when they happen to coincide with important levels. So this morning star formation here, given where we can find it on the chart, is of interest because it shows the potential for a larger rebound higher. Obviously, it's going to be very important to see if there's going to be some kind of a deal, because as Dale said yesterday, there's no question in my mind if we see a failure to achieve some kind of a deal, especially if Trump comes out with harsh rhetoric, trying to pressure the Chinese, they will weaponize the yuan, in which case we should expect to see more upside, potentially even a break above the recent highs, near 7. So, and that's going to affect, several markets. That's why I wanted to make sure that I don't forget to show it once again. Now, CAD trade was delayed. Yeah, thank you. Yeah, thank you. What Stelios read. Okay. So, now, having to do with the cable, I'm a little bit troubled with cable because, the pullback so far is definitely not impulsive, but the move higher was really not that impulsive as well. I have to say, though, that, we're currently testing an area of support. It was previous resistance here, previous support resistance in the past if you zoom out. So I think that the bulls will make an attempt to hold this zone. And I'm looking to see what's going to happen from there. Not because I intend to trade the cable anytime soon, but because I'm having a close look at the crosses, which in my opinion look far more interesting than cable itself looks. So this is one of the reasons why I'm paying attention to it. I have to say, on the other hand, that nothing has changed with the Euro USD, as I said yesterday, and that hasn't changed as well. USD Swiss looks a much better proposition. If you want to trade the Euro USD, just go with USD Swiss long instead of short. Now, if you want to be, on the other hand, long the Euro USD, yeah, you'd rather buy the Euro USD. But I think that as long as we remain in this ascending channel, in my opinion, first option, you do nothing, by far the best. But if you really want to commit to something, I think I would still favor the potential for more downside here. So if I really, really had to do something with the Euro USD, I would be selling it, in which case we're going back to the first scenario that I mentioned. I think buying the USD Swiss, if you believe that Euro USD is going to move lower, is likely a better proposition. Now, after the price action that we had yesterday in the Aussie still looks constructive in the short term, simply because I see a move higher, I see a corrective move lower, we broke above it, and so far the pullback doesn't look something more than a corrective pullback. So there is the potential for one more push higher, as I was saying yesterday, towards 74 cents. Now, 74 cents is obviously going to be resistance because it was that previous high, and passing through that previous high is also going to change the structure, because that's going to be the first higher high that we will have had in a long period of time. Aussie spent a very big part of last year, the vast majority of last year, actually, like 11 out of 12 months being more or less under pressure. So I think that a break higher from here is going to constitute like a big development. So I'm guessing that 74 cents is going to be defended. Now, there is not much else to say about Kiwi. Kiwi seems to be performing better because it has already tested the previous high and the 50% fib. It did hold this horizontal support resistance area though. So I mean, we drew that when we were trading down there. I still believe that this zone, this confluence of resistance is roughly at 70.5 cents. Looks like an appealing upside target. And what I said before when I interrupted Blake, I do think that especially if we get some kind of a deal, the Aussie is going to be hurt more because the Australian economy is exporting quite a lot of raw materials. Iron ore is one example. So I do think that the Aussies should suffer more in such a case than the Kiwi, in which case I would expect a continuation lower in the Aussie Kiwi, which anyhow looks like being in a corrective move. I mean, this price action definitely doesn't look strong. So I would expect sooner or later to see a failure from this little channel and a move lower towards parity and, some kind of a deal because between China and the US can really provide the needed catalyst in this case. Aussie yen, as I said yesterday, at strong resistance here. You can see previous triangles support 50 DMA, still holding this ascending channel. So for me, the confirmation of a resumption lower is going to be the break of this channel, but I would definitely not be buying it here. Kiwi yen, same kind of a deal, an ascending channel. Next area of interest, I think, is the 76 cent area. There is even the potential that we're going to form some kind of a head and shoulders formation here, although the vast majority of the analysts don't like to view them as continuation patterns. There are some that accept them as continuation patterns. I have to say that I also take them more into account definitely when they are at the bottom or at the top of a trend. Anyhow, something to pay attention at. Let me see. Hi, Steve. What do you make out of the price action in Europe, DAX bonds? Okay, first of all, the bonds, and not surprisingly, bond is the ticker. Yeah, there it is. First of all, bonds remain in an uptrend that has now cleared this long-term descending channel, which has very corrective characteristics. Okay. Now, on the other hand, we mentioned last week that we are seeing an RSI divergence, which we definitely can't ignore. We also have a horizontal support resistance area a little bit higher towards 166, 166.20. So far, we are finding resistance at 78.6% fib of the all-time high to this March last year March's low, I have to say that a pullback doesn't look unlikely. Now, does a pullback mean that we're going to find some kind of a significant top here? I can't really take that as a main case scenario simply because we had this major breakout. So even if we get a pullback from here, I have to admit that I would be looking for some kind of a price action that would be corrective in nature. And, ideally, I would want to see a retest of this breakout channel and perhaps then another leg higher. So although I do think that we might see some weakness in the bonds in the short term, I do think that it should be, quite temporary. Now, if that plays out with the bonds, at the same time with the DAX, what you should expect is more strength, from the DAX and then rolling over. That would fit very nice with the technical picture here in the DAX. Why? Because that would permit perhaps for the DAX to rally up to this area roughly to fulfill the inverted head and shoulders formations target before seeing some selling pressure once again. Okay, so something like that would fit very nicely both for the DAX and the bonds from a technical viewpoint. Don't forget that, as I said, the DAX remains, you can be bearish the DAX as long as we remain below 11,800, which was the neckline of this huge head and shoulders formation. But on the short term, you also need to respect this inverted head and shoulders formation as long as we remain above 11,000. So basically, between 11,000 and 11,800, both the bulls and the bears have reasons to think that they're at the right side of the market. But if we break above 11,800 or if we break below 11,000, I think that, in the first case, the bulls will now have the upper hand. In the other case, the bears will maintain the upper hand. So, that's the situation here with. Now, if the question was also one that, required some kind of a macro theme, as Stelios has said, and I've said before, there is a clear weakness in the data that have been coming out for some time, despite the ECB remaining very dovish. That is definitely something to take into account. I mean, one very big country with, big political risk and big financial risks, Italy has already started slipping in a contractionary territory for many indices, which, in essence, pinpoint to an increased probability of an economic turn lower, and that's definitely an ominous sign. Okay, so those are things that you should pay attention to. Because some recession starting there, and who knows what happens afterwards. You know how it is. It's it's like a domino effect afterwards. So that's what I think. Why oil is lacking clear direction based on technicals? I wouldn't say that oil is lacking clear direction, because the situation with oil, in my opinion, is quite clear. So if we want to have a look at the big picture is the following. We had a very impulsive move lower that started in 2014 and lasted up until 16. We had, quite a prolonged move higher, which, comparing the two moves looks to be corrective. We had another impulsive move lower, because this move lower is clearly impulsive. And now we're seeing a rebound, which, in my opinion, can unfold further, but I will still be viewing it as a corrective rebound. So
I think he's talking about, Steve, the last 2 weeks action. If you break it down to like an hourly, you'll see how it gets slammed up there near 55 or so a few times and keeps holding. So I think he's talking about the action for about the last 5 days. And it kind of reminds me, and I can't even rule out one more push to take out Sunday night's high. Markets top with violence, and it's been pretty violent. Yeah, so I would love to see it take out Sunday night's high. I'm a seller up there if that happens. But that's what he's talking about. It's been pretty whippy.
At least in the short term, it's very likely. Yeah, at least in the short term, it's very, very likely. Now, if we're talking about a very short-term horizon, I have to say that crude has been producing quite strong moves on both sides, and you should expect that the market, on occasion, is going to pause and consolidate, because one form of correction is always some horizontal price action. So, you should always price in that as a possibility. And, what you should be doing in occasions like that is abstain from trading, that specific instrument, because, trying to trade something that is consolidating is quite dangerous for your trading account. So I don't think you should be fighting the tape. When the tape becomes quite choppy, just be patient and trade something else until it starts looking good and clear once again. Obviously, we are closer in approaching a short-term equilibrium, and that's why we're seeing this kind of a momentum loss. That's the most basic explanation in this occasion. So, Coach, is your guest here? Because we are at the top of the hour.
Ryan is here.
Okay, perfect. So enjoy the interview. I know that Amanda will. I will also try to listen in.
Amanda, get out your pom-poms. Ryan Littlestone is about to take the stage. And Ryan, get your bodyguards out. Really looking forward to talking to you. Sorry, I don't remember talking to you many years ago on FX Street in LAR. Welcome to FACE, Ryan. You're now the presenter.
Yep. Hi, Dale. Can everyone hear me okay?
Can hear you, Ryan. Okay, so are you an Aussie?
Yeah, just at the moment, that's just sitting with my charts on. I've got a few here that we can go through.
There they are, buddy. So thank you so much for coming in today, Ryan. Our whole team respects you, and really nice to have my memory refreshed here. And you know, before we get to the markets, what I've been doing here on FACE is, I think a lot of people like to know, because everyone in trading has had a long and winding road on their journey, how you got started in the business, who influenced you, and, you know, just a little bit about your journey, buddy.
Yeah, certainly. And just like to say thanks for having me. The respect is mutual back at you guys. I think you guys do a wonderful job. You, of course, Dale, been in the business many, many years. It was a long time when you first interviewed me, 2012, 2013. So
I remember now.
Yeah, I think we were talking oil or something at the time. We were probably up at 150 bucks or something.
The good old days.
Yeah, the good old days. But I've been in the markets, you lose count sometimes, over 25 years. Started off on the LME working for an old company called Rudolph Wolf.
Remember.
Went from there down to the live floor. That's where I really got the trading bug. Started off broking down there, then went local, trading my own money. And, you know, in the early 90s, from that point, I, as I say, got the trading bug and been trading my own account ever since. And
how fortunate that, you know, Ryan, weren't we lucky and fortunate that we came into the business when open outcry was popular and you could get a job or do something in an exchange and rub elbows with people who are doing it for a living and have, you know, press the flesh and really have develop relationships with people and learn a lot from people, compared to the struggles that people who are trying to break into the trading industry now as a trader have to have such a fine discernment between what is junk and what is practical. We really had a nice advantage, didn't we?
Oh, definitely. I mean, it's probably one of my, in my career, it's one of my biggest regrets is that all went down and all folded. Because
they're all bowling alleys now.
Yeah, it was a whole different mentality of learning how to trade. And it was a big eye opener for me, because I went from being a broker, you know, sitting on a desk filling orders on the LME or futures, you know, every single market around the globe. And even down on the floor, it's easy, if you like, to be able to fill orders. When you make that step into trading your own money, I remember distinctly my first day in the pit, I stood there, my own money, looking at the prices on the board, listening to everyone shout around and think to myself, everything I've known for the last 3, 4, 5 years means nothing. I don't know right this second where that price is going up or down. And it's bang, it hits you, and then you've got to suddenly wake up and think, right, I've got to learn this stuff. So you learn it, you get into the habit of it. But like you say, you know, that all went. And when I went back to full-time trading in 2010, again, it was another learning process. You know, I started off with the charts and MetaTrader and all those, slamming all the indicators on. You know, my charts used to look like the London Underground map. And you sit and you think, I still don't know where the price is going. I've got all this crap on my screen. I don't know where the price is going. So you have to go back to basics. They're pretty,
though. They're like artwork. They're pretty. You know, Ryan, you bring up a great point. You know, after open outcry went away, a lot of guys, even though they were trading their own account on the floor, it was a different type of trading. They were just trading against paper, etc. And then they had to make the transition to learning how to become directional traders. And many of them were not able to make that transition. Congratulations to you for being able to do so, because, you know, a lot of guys that made millions every year in the pit were not able to go home and sit in front of their workstation and, you know, be a discretionary trader looking for direction in the market. Not an easy transition. Yeah,
that's right. Because you could trade two ways down on the floor. One was the correct way, with learning how to trade properly, learn how the markets move properly, learning about the fundamentals, or you could trade off the elbow, as we used to call it. You know, you'd have your little buddies in your little group, and if you're on the offer and they came in with a trade, they'd hit you first, and you know they'd then see you right if you got a bad trade. You know, as I say, we called it elbow trading.
Oh yeah, Genzies.
Yeah, but what I was lucky. I had a couple of great mentors in the pit. You know, they were listen to what they say, and they were deep in the fundamentals. And I learned all that because that's all we had. We didn't have charts. You were looking at a news screen and you saw the data come out, and you had to make a decision on that. And most of the people, it was simple. If the number was up, you bought it. If the number was down, you sold it.
Yeah,
but that was never enough for me. I wanted to know what's going to make that number come in up or down.
So a lot of guys using point and figure charts on the floor by hand. You know, so point and figure, the X and O's were also big. So great story. You know, like you, I spent time as a runner on the floor at the CME before I became a member. You know, taking orders from different branch offices, doing out trades, all of that stuff. So we were very fortunate to have lived in that time. So here we are now, Ryan, and you know, volatility in FX has really been a non-event, and I'm curious as to, you know, what you do in this type of environment where ranges are compressing, and do you move away from the majors and start focusing on the crosses? What chart do we have up here? Okay, so you want to start with the Euro USD weekly.
Yeah, well, I mean, this personifies what you're just saying about, you know, volatility and how you adjust. And it is a big adjustment because, as you say, you know, some traders who have coming into this game you know, we've just come off the back of a financial crisis that's lasted 7-8 years. You know, if you were 12, 13 years of age back when this all started, you're now 19, 20, just get into trading. You don't know what it was like before. You don't know what it was like over the period of the crash. So we have, you know, we've been there, seen it, done it with the years we've got behind us. So we know how to adjust to certain market conditions. So like you say, this year so far, latter part of last year, low volatility. You know, there's not been that much going on. So you have to adjust your trading. We're not getting the big, huge ranges anymore. You know,
so
and
do you increase leverage? I mean, I always tell people to use reduced leverage. Does it make sense to increase leverage during this time frame where the average daily trading range is tighter than it's been in years?
I'm inclined to lower it, and the reason is because you can't trust a move. You know, it's no good buying euro dollar here and thinking, yeah, I'll buy it here and it's going to go to 17, 1800. It's not going to happen. If it does, it's going to be big news that drives it there. But in the everyday moves that we're seeing, you can't buy euro dollar here and think, oh, it's going to go up. You can't trust what we're seeing, and because these ranges are tight, you don't want to go overboard on leverage, because if it turns against you, if you're trying to grab 20 pips here and there, if it turns against you, as it can do, you increase your losses.
You know, I want to ask you, as a former floor trader, you know what, I came up with my handle, Forex Stop Hunter, because when I was on the floor running orders into the pit, anything that had STP at the end of it was of great interest to the locals, and they knew where they were. And then when they elected stops on either side of the market, you'd actually hear an audible, the noise level would increase almost to a roar. Did you see that on Life? And do you still believe that stop hunts are part of it, but instead of it being the locals, it's the algos and high frequency trading? Yeah,
I mean, we look at stops a lot here at Forex Flow, because we get some of the order information out of the banks, and most interest to me is where the stops are.
Okay.
Not necessarily for the point of view of are they going to get run, but a possible reaction if they do get broken. I mean, here we are looking at the euro dollar chart. I've got the two red lines here, 112, 115. For me, that's the range. It's been the range for the last, 4 months. I've been trading in between that, not so much on the low side because we haven't got down there as much, but up against this 15 level, it's been a great short. But then, look at this area around early Jan. The guys, we were sitting here, I was thinking, right, are we going to short against this level again? And we were just sitting here looking at the market, and I knew there were stops around, 115.10, and we were just sitting here thinking, this is looking breaky. And if these stops are building and they get tripped, we're going to see a big follow through. So right at that moment, some of the guys went, yep, I agree, and they jumped in, 1470, 80s. I stuck a buy stop in at 1507. Bang, it happened, and we ride the wave higher. Because that's the information we get. We hear that there's stops there. We hear they're growing. The level's been tested and tested and tested. So naturally it's building up into a big thing. So when you get breaks like that, bang, it goes.
What do you do the next day? Because a lot of people back then, Ryan, were calling this a major breakout. I'm a believer that Mr. Market is pretty mean, that he's going to shake out as many traders as possible before the move they're looking for occurs, most likely without them. And the next day, it's like the market said, okay, you missed the breakout on that day that you got long and the stops were elected. And the next day it's saying, okay, you missed it yesterday. I'm going to let you in at the breakout again today. What did you do the next day?
Well, the next day, I mean, we managed our trades up. So I was running a stop behind it for that very reason, that if it's going to fake out, I'm gonna lock in the profits, and you sit back and wait, and then the trading stops got hit. We came back under 1500, and then you think to yourself, okay, now we're looking at a failure. The very next key point you're looking for is that confirmation underneath. Once you get back under and it tests and holds, bang, that's you back in for a short. And here we can see on the chart there, just around the 15th of Jan, we've come back under. Bobbled around a bit. We had a dip to 1450. I'm assuming you can see my mouse cursor there, can you?
I can.
So bang, up we go, 114.90, hold twice, and off we go. And this is exactly what we did last week. Last week we had another break over the FOMC. It motored around the area. Then we had to push up to this old fib level.
Yeah,
78. Shorted it, left it alone. Down here when we came under and got that confirmation, bang, I was short at 98 and rode it all the way back down again. Because
would you consider your trading scalping?
At the moment, yeah. By my main trading methods are long term. I like the big long trends. I like getting in early in the fundamentals, the changes. But right now, I'm in short term mode. I get into the trade. Sorry?
Sometimes guys that like to have long term trades on have biases and ideas of what it hasn't developed yet, but they see it developing. Do you see anything, any of those trends maybe that haven't begun to trend yet, but are in the embryonic or developing stage of turning into what you're looking for?
Yeah, very much. The big one we've got on our radar, and we've had it for a couple of years, but it's sort of waiting for other pieces of the puzzle to fall into place, is the Bank of Japan and yen. They're still down the rabbit hole on QE, and I think they may have missed their opportunity last year to indicate what they're going to do and maybe scale back a bit, and that's going to be the net for the yen, especially. It's going to be the next big trending move. We're going to see big things coming for that.
So you're talking about like 120-ish type of yen, big move to the upside?
No, I think it's
US dollar yen.
Yeah.
Okay.
Dollar yen. Yeah. We're going to see.
So you're looking. Will that be a risk-off move in equities, or is that going to be mainly tied to yields? Because at times the yen will connect and disconnect to different asset classes. What are you thinking?
Well, actually, just to go back, I think it's a buy for the yen because obviously, as a central bank tightens, it's naturally good for the currency. But yeah, particularly with Japan, it is going to be a stock move in the Nikkei. Because the Bank of Japan are propping up after the stock market anyway, and it's one of these situations which it's going to be really hard. And I think it's going to be really messy. It's not going to be like the Fed, where it's going to be long drawn out and pretty well managed. I think it's got the case to be very, very messy, and that also can obviously feed into the other pairs, feed into the crosses, feed into dollar yen. You know, the US and Japan, their economies are quite heavily interlinked.
Do you have any levels on the weekly or monthly or daily that you're looking for where you might begin to implement a campaign trade of short US dollar yen?
Yeah, well, it's twofold. In terms of what we're talking about, it's long-term trend at the Bank of Japan. We've got to see certain things fall into place. The Fed, you know, get to their normalization point. The economies, you know, get into a neutral level or a level where we're just tinkering around the edges with monetary policy. And that's when the Bank of Japan have then got to step up and say, right, inflation's where we want it. The economy's okay, maybe not hugely booming, but we're doing okay. Now we've got to roll out and roll back on all this stuff. We're doing all this QQE and the yield curve and the ETF buying and all that. And they've got to manage that. Now, they've got one or two options. They can either long-term it and do it over the next 50 years, or they can do some short-term moves. But regarding the pricing, at the moment, I've got the dollar yen chart up there. Again, we've got two big levels to look at. You know, we've got this 114.50 area. Again, another long-term, you know, all the way back to 2016, 17, this level up here. A big, strong level. This 108 level is a key level as well. You know, we went through on the flash crash. And
I wanted to ask you that before we move on. As a trader and technician, do you pay attention to those wicks going forward after an event like that? So is that an important low to you, even though it was there for about 5 seconds?
It's an important low because if you look, it pretty much matched that early 2018 low. So there was a reason why it stopped there. You know, you've got to take it with a pinch of salt because it is a flash crash move. But what I tend to come back to is this area here straight after. What does the price do straight after? And we had a bit of fumbling around, but the key point was, let's zoom that in. The key point was we got back above this 108 level, and that built the base again. You know, and we can see from earlier back in late 2017, we had a test the level, broke under, became resistance, break above, became support. You know, this is big long-term levels. And when you get those levels, same up here with the 114.50, they're the ones you want to trade. You know, you can have a lot of confidence in these levels.
What the lines on your chart, the green and the blue, they're moving averages. What moving averages are they?
Simple moving averages. The green is the 200, blue is the 100, and the brown is the 55.
Okay. All right. So we have, it looks like they're beginning to pinch together. Maybe we head into that zone. Do you use them for that as far as where a market could go to and still be bad? How do you use your moving averages, Brian?
Yeah, I use it the same way as most of my tech. You know, if we get good confluence areas, you know, say if the 55 comes down to meet this 1080 area, that's a level I'm looking at. The same up here, 1175. It's all, you know, the more tech you have at a level, the greater the confluence, the more faith I tend to put in them.
Okay. And anything else besides US dollar yen that you have a macro view on, you want to share? Where's your head at with gold?
Gold, not really looked at gold for quite a while.
Okay, so then
really
forget
the only
it.
other one I've got is
what are you looking? Yeah, you don't have to go off the cuff on something you're not paying attention to.
No, that's
what
fine.
else are you? What else are you paying attention to besides US dollar?
Can I mention the B word?
What's that?
Brexit.
Oh yeah, okay, yeah. Let's talk about it.
Yeah. So I'm actually once again I'm scaling in small longs in cable. This is a trade that over the various different events that have gone on through Brexit, a couple of them I've traded on the long side for positive outcome. It's getting to the point now on Brexit where the clock is running down. We're getting to a point it's either going to be decisions coming one way or another. I need an interest in that. And I haven't traded the pound a lot for the last couple of years because it's been so volatile and a complete poop show. I've pretty much steered clear. It's been too risky for me. But now I want to be long because I feel there's a deal coming. There's too much at stake not to have a deal coming. And the options that are on the table now are more coming around to a deal of some sort or indeed no Brexit. So one way or another, the positives are lining up more than the negatives. The problem we have, obviously, is riding out the intraday noise. You know, we're under 29, we're under 30 now, 130 now at the moment. I've been scaling in as usual too early. I mean, from 130, 180, sort of every 50, 70 pips down. But I'm happy with that. I mean, very small. If we get under 127, I'll have a reassessment point. But I'm going to sit on this and see where we come after March.
So kind of a mental stop instead of a hard stop at that level?
Yeah, I've got it actually in on my trades because I always have a disaster stop.
Okay.
Whatever I do.
Because, you know, I used to use mental stops. And the last time I used a mental stop, I ended up in a mental institution.
Well, that's right. I always have a disaster stop. If I'm trading long term,
okay.
500 pips.
Yeah, like fail safe.
Yeah.
Just in case something crazy happens.
Yeah, then you adjust it as the price action unfolds.
Okay. So you have a lot of respect from our team, and you said that you feel the same way about our work. So why don't you talk about what you do at your company, you know, what your model is, and perhaps, you know, you can show your website, and so that people that are interested to check out Forex Flow Live would know how to get there and what you guys offer.
Yeah, definitely. Well, I came into this game, as you know, at Forex Live. We're dealing the news and analysis on the markets, and that's something that I've grown into, if you like. So I've got the website running, which I do pretty much my own analysis. It's more trade orientated, so I talk about trading, what these numbers mean actually for market moves, what the fundamentals mean.
So you're mentoring your community.
Yeah, exactly. My main product is our Forex Flow trading platform, which is
I looked at it. Very cool. Why don't you show it?
Yeah, the platform, I'll have to see if I can get it up. It's on my other PC because it's
should always be prepared, Ryan, to do a commercial.
Right. Okay, right. I'll do that. Okay. The platform is basically it's chat rooms, and it's got some great tools on there. We list the Forex option expiries in great detail, Forex orders live. We've got a great live data calendar in there, several other tools, but it is predominantly to help traders along. You know, we're lucky. We've been in this game a long time. We've learned a great deal. Unfortunately, we can't put it in pill form and give it to people. So what I've tried to do is, as you say, mentor people, show them how to trade properly, because the majority of people we speak to, they just don't know how to trade properly. They always want to look at where the price is going. They never understand it's not about that. It's about.
I'm showing your website now, Ryan. Okay.
Okay. Yeah. So that's the website.
All right. Okay. And the Flow Live news stream, it's taking a little time to load here.
Yeah, it does take a bit of time to load. Yeah.
But you know, you have a lot of different features. What's Flow TV? Kind of like a live streaming video of what you guys do during your sessions?
That can be anything. It can be a day-to-day video that I do, you know, a quick snapshot of a market, or I do some videos for some guys at Core TV for the investing channel. So that we just pop up, you know, anything that's fresh and we've just done pops up in there. The Flow platform, if you want to click on that, give you a rough idea of what it looks like.
Got it.
So in there, we place our trades. All our traders trade live. We don't, you know, we're very strict on the honesty side of it. If you're doing a trade, we don't want to know about it 15 minutes after it's happened. We want to know your levels, you know, and if the market's moved 10, 15 pips, we don't want to hear about it. You know, we try and keep everything live, everything above board, because that's the only way you can learn. It's no good me saying, you know, the price in cable now is trading 129.63. Oh, I sold that 10 minutes ago at 130. You know, no one's going to listen. No one's going to believe you've got the integrity for that.
Your platform is very interactive. Kind of reminds me of what I did at FX Street. Let me ask you this. I'm a big believer in communities, and you attract very good traders into your community, and they share their ideas. I remember times walking in and not having one idea, and because of the community, and people I got used to knowing that were very good, I'd have compelling setups to consider, even if I came in with a blank slate. Do you believe that communities can create a mastermind type of environment?
Most definitely, 100% without a shadow of a doubt. I've got loads of great guys in here. I've got an ex-interbank trader, you know, who was in Japan for 10 years, and he knows his onions inside out. We've got great technical traders, but it is the community spirit, and it comes back to those floor days, because you had that environment. You know, even when you're on the trading desk, you had an environment where you could speak to the people next year, you could bounce ideas off of, or they might come up with a reason you hadn't thought of why you shouldn't enter a trade. And, you know, collectively, we've had some fantastic trades. You know, dollar CAD over the BOC last year. You know, we had setups running into it. We knew what was going to happen. We knew how it was going to go. Trades were set up, bang, the whole room profits, you know. And those big trades, you know.
I don't know how you feel, but, you know, mentoring people, I'm almost, I'm happier when they're doing well.
Yeah.
Even if I miss something, you know, it's reward, you know, it's psychic. It doesn't show up in your account, but it's kind of like psychic capital gain.
It's you know fantastic. I mean? When you see all the comments and people posting, and they're saying, and we've put it together a big plan. Yep, I've just bought here. Yep, I've just bought here. Yep, I'm in here, or I'm laying my orders here. And then 10 minutes later, bang, it happens, and you know that everyone's just made money, and it's a lovely warm feeling.
All right. Well, I tell you what, Ryan, I want to thank you so much for coming in today. I love your mission and what you're doing for people, and we share some similar backgrounds, so you know we're paying it forward. You know, isn't it? Besides, if you have children, that what you've done your whole career is kind of like your legacy. And what you could leave people is would give them ideas that when you're retired on a tropical island, they could use the rest of their trading career, right?
Yeah, I'll get them working first, so just so they know the value of pound.
Yeah, you'd probably be trading under that palm tree anyway, you action junkie. So thank you so much, Ryan. I hope you accept me now calling you my trading warrior brother, and wish you and you know all your associates and traders that pips rain down on you guys in 2019.
Yeah, and all the same to you, and thank you for having me on. It's been a pleasure.
All right, Ryan. Everyone, this has been Ryan Littlestone, and you could follow him at Forex Flow Live on Twitter, and go to his website, www.forexflowlive.com. That's Turnaround Tuesday, everybody. You're very welcome, Hamid and Nick, and you're welcome, Tom. Enjoy the rest of your day. Remember, don't just count your pips, count your blessings. See everyone tomorrow. See you in private chat, where we have the type of community that Ryan has. And, you know, you have the ability to be in there much longer. You could spend 10 hours a day in the private member chat with, you know, pretty good traders like Blake Morrow. So I'll see everyone tomorrow. Much prosperity the rest of the day. And February is here. Let's make it a great month. Adios. And thanks again, Ryan.
Cheers. Thank you.
Cheers, mate. See, I'm not really from Chicago.